Remember, Blue Horseshoe likes Anacott steel, right? That's a Wall Street reference. All right. 8:30 a.m. is a typical U.S. news cycle. At 8:30 a.m., we're going to have U.S. initial jobless claims. They're supposed to rise from 218,000 to 220,000. We just had non-farm payroll. Totally dismayed. This a total disaster. A trash fire from 139,000 forecast to 71,000 or 72,000. And the BLS head got fired by Donald Trump. So we're seeing jobless claims. Now, this could be negative for the U.S. dollar, but again, I wouldn't trade during the announcement, okay, unless you have the predictive function in Pip and Run like we have. And if it doesn't show up in the predictive function, we just wait for a news fade. So we are gonna trade this, but it all depends on the behavior before and after and during the announcement. Okay, and I would trade the euro. The euro would be my currency of choice at 8:30 a.m. There's an 8:30 a.m. news cycle and a 10 a.m. news cycle. There's news for the United States, right? And the UK, they seem like they release stuff with 7 a.m. is where they do their monetary. But this is a Bank of England rate announcement. This is big. Super Thursday, huge, right? And then you have Canada has the IVPMI, and that's supposed to rise from 53.3 to 55.2. And all the Canadian flags there, and employment change, employment rate, participation rate. Unemployment is supposed to rise from 6.9% to 7%. Unemployment change drops from 81,000 to 15,000. So it seems like there's like kind of a global slowdown. You got the slowdown. I mean, that's a huge drop in jobs. Participation rate supposed to remain the same at 65.4%. And then we have the inflation rate out of China coming out too. That's going to be kind of late. Maybe the Australian dollar might give you some boost there, right? But that concludes the economic calendar. So I hope you got a lot of that. Now we're going to go right to the technicals. I know you guys are going, oh, Greg, get to the technicals. This is really boring. And don't worry. But it's very important. The economic calendar is one of the most important things that we want to look at, right? In fact, we're going to start the DXY. This is the dollar index, the U.S. dollar index, a basket of currency pairs versus the U.S. dollar. And basically, since we trade the major currency pairs, that the dollar is in the driver's seat of these pairs. And in fact, when you see me trade, if you sign up for our VIP school group where you're trading with me live 3 days a week for each month, just $97 a month, you get to watch me trade. I'll have the DXY on half my chart, and I have whatever I'm taking apart the next one, maybe dollar yen on one side or euro dollar next. And basically, I'm going to trade in the direction of the U.S. dollar index. Right now, we can see that the U.S. dollar index on a daily chart making lower highs and lower lows, right? And we get this little pop here, and then we have this drop here. This is a U.S. dollar index. That's a daily. I like going out to weekly. And the weeklies, actually, we got this little nascent rally, higher highs, higher lows, but big rejection. Big rejection. We got as high as 121 rejection. And you can see, we have fallen quite a bit. I mean, there was a big piece of support. A lot of the dollar bulls were hoping that would hold, and then we're looking for a price to retest the high of 115.06, highs that we saw back in September 26, 2022. But we broke down. And it looks like we're trying to recover. We hit the back side of this trend of this support line here, right? And seasonally, we might continue to rally up to maybe the 30% retracement takes us to 101.91. So we could seasonally, typically around this time, we see the dollar rallying up until about September or October, and then we would see maybe a continuation down. So, but let's drop down to a daily chart. Daily chart, we're getting a little bit of a pullback, a big pullback, but big bearish engulfing, kind of like a morning, an evening star pattern right there, where we have the dollar really come down. So it'll be very interesting to see if we see some type of recovery from here. I still see this nascent little uptrend, higher highs and higher lows, and we have a higher high and a higher low. I mean, we've stopped here for now, but we still have a baby uptrend of some kind. So bulls versus bears, dollar index, I am slightly bullish. Okay, just slightly. You're gonna get one bull out of that, right? Now let's flip it on the backside and take a look at the euro dollar, right? And we take a look at the euro dollar, we can see our daily chart, and you can see we had a nice uptrend, higher highs and higher lows. But we ran into a little bit of trouble. We ran into like almost like a pseudo double top, very close to a double top there, and then prices pull back a bit, and we got this big recovery on the daily chart here, right? But we're on the other side of this trend line, which is kind of bearish, right? But we are recovering. Maybe we recover a little bit on Monday, right? And then we might be seeing some type of an A, B, C drop, right? So, but we do have this rising trend line here, so a demand line. We actually connect. I'm going to move that one off a little bit there, right? So there. So we're trapped. Price currently is trapped between two trend lines, and we can see a pop and drop, right? Three-wave correction, ABC. Interesting. I mean, it's kind of very interesting here that we had this drop and this pop. We're bullish above 117.82. We get above 118, and then we could go. We can go back. I mean, let's move that to a weekly chart, right? So that rejection there. I mean, if we can get past that area, there's nice area of space here at the 119, the 119.09 area, which was a high from August 30th, 2021. And we can break that area there. We'll have smooth sailing to 122.52. And that's a high we have not seen since June 2021. And then, we've got the space 123.49. And that was a high of 2020. And and then we would see something like that, right? But I think basically we've got this weekly chart where we have this really strange candle here. The daily's doing a U-turn, but I don't think it's going to last a bit there. I think we're going to have an A, B, C drop. We break below 113.84, and we could see pretty steep decline. And I love this if this was our. We don't get any higher than that. Then 100% expansion takes us down to like 113.09 or so. We also take take a basic fib from the bottom, from the low to the high, and look for that red line. My red line is my 38% retracement, and the 30% retracement is at what? Well, 111.81. Expansion. No, sorry, I said 113. I said 111.13. 111.30. Okay, 111.30. I'm sorry, 111.30. Right. You notice the 38% retracement of the rise and the 100% expansion of the zigzag down. We almost have like some type of confluence there, right? So I think we get our confluence takes us down to this zone, right around that area, right around that puts us like one spot 111.4. Yeah, what's that? 111.14, right? Okay, there we go. Those strange numbers on the euro, right? So bulls versus bears. We are like short term, like 1 day bullish, but the rest of it we're bearish. I'm ultra bearish on the euro, right? Let's move on to the pound. Pound has big news. It has the Bank of England rate announcement. Let's go ahead and go across the pond. Take a look at the British pound sterling, and we can see that after our big rise from the King Charles bounce, I call it, right? We had the drop after the Queen Elizabeth passed away. Then we have this called the Prince or the King Charles bounce, and now we got a trend line break, and we're just breaking on down on the weekly chart with cascading lower lows and lower highs. We still have a nascent uptrend going on, but we could correct a little bit more. So the intermediate trend is down. The longer term trend is up, and we did tag this 38% retracement at one spot 3134. All right, 3134. We tagged it. But I think we get down to here. There's a 618. We have a tag right there. You tag, you're at one spot 2734. Right, that'll take us down. Let's take a Fibonacci expansion to that using that wick. And let's see if it comes to the same area. And the wick is at, well, the 1.618 typical expansion, and the 618 where this wick is, they're like, there's a zone, there's a confluence right there that you can look at that can be useful for a target. And as long as the dollar is up, we will probably see a continual move to the downside here, right? All right, now as we get down here, I would suspect that we get a bounce, and going into the year, usually pound and euro and Aussie rally going to the end of the year, but I think we are going to drop until October, and we'll get our turnaround there. So this might be a nice swing trade. I'm not a swing trader, but I will scalp around a core position, and I would definitely look at scalping this out. Bulls versus Bears. I look for a bearishness to continue. Okay, so let's go ahead and we can look at dollar Swiss. Dollar Swiss is kind of cagey, because if the stock market starts to fall, what we see is we see Swiss franc. We see people buying the Swiss franc, rolling into Swiss franc for safety. And so typically around this time, seasonally, over the past 80 years, the stock market usually gets weak. It's traditionally weak in August, right? It's the stuff just a given, as we call it, seasonality, that I can show you in a couple of graphs, a couple of Bloomberg terminal shots that I have are the seasonalities, right? We have our seasonalities. We have the market kind of tank there, right? So this is the S&P seasonality, and you can see traditionally, August has been, it's kind of a mixed bag. 2024 actually was a good day for August, but you see August, the average 0.42 is pretty low, right, for August, right? Let me see if I have some others there. This is the Dow seasonality index, and you can see that 1.03. It's not particularly, August is not particularly good. 2022 is bad. 2023 is bad. 2020, we had all the stimulus coming in there. Those are like outliers, but 2019 was seasonally bad as well. And again, your risk assets are going to take it on the chin during the August period, right? Do we have any other seasonality charts? Yeah, but yeah. Okay. And let's see, let me do this one. Okay. And let's go to Jeff Michaels. Oh, no. Okay. Anyway, I'll show you that later. Okay, so dollar Swiss looks like it's curling over for a drop. Daily chart, we have these lower swing highs, lower swing lows, and we can go to a 4-hour chart, and you can see big bearish engulfing candle, and it looks like it's gonna try to grab some speed to the south side. There's a 4-hour chart, and I can zoom this in a little bit more and bring this over a little bit more here too, and we can see that after this hitting the 200 moving average, we see price kind of moving down. Okay, so dollar Swiss, and what we would say about that, it's bearish. And well, let's go to our. Okay, we're gonna go across to dollar CAD. Let's go across the pond. Dollar CAD weekly chart, different. Even though they're both a dollar pair, and we see that in dollar CAD, Canadian dollar is really influenced by oil. They're a big producer of oil. In fact, the Canadian dollar is one of the commodity currencies or COMDOLs. New Zealand is a COMDOL. Australia is a COMDOL. The commodity dollars are commodity-based currencies. They rely on exports. And right now, the price of oil is kind of down, and consumption is kind of slow. And so you might see the dollar continue to rally against the Canadian dollar. But let's go ahead and take a look at some charts. And we can see that we do have a slight uptrend on the weekly chart, higher highs, right? Harami could be bearish, but we are sloping higher. Weekly chart as well, hitting this support area and then maybe rising, right? Nice bit of a gap here that could be filled from the 142.58 area down to the 138 area. So plenty of room there. Daily chart, though, not so encouraging. Looks like we might get a little bit of a pullback, right? We do have, triple bottom in that area, and then we have this rising trend line. Hasn't been really tested yet. 4-hour chart, though, we do have maybe some type of a morning star, a bobbing pattern starting, and it's probably happening at a Fibonacci zone as well. At the 38% retracement, 30% retracement is always my red line. We're getting buyers stepping in here. So bulls versus bears, I am bullish the dollar CAD. Okay.